As Bitcoin approaches the psychological milestone of $100,000, investors are eager to understand how it stacks up against traditional assets like the S&P 500. In this video, we'll explore the performance of Bitcoin in comparison to the S&P 500 over the last 5 years, highlighting key market phases like the COVID-19 crash, the 2021 bull run, and the 2022 downturn. We'll also dive into a 10-month comparison, especially after the introduction of Bitcoin Spot Exchange-Traded Funds, or ETFs, which have attracted more institutional interest. Notably, Bitcoin has experienced a nearly 50% rise since the 2024 U.S. election result. We'll look at that in more detail later. Let's dive into how Bitcoin and the S&P 500 have aligned or diverged over time and uncover the insights their patterns reveal. Let's start by analyzing the 5-year comparison. The chart shown is normalized to compare the percentage changes in price, allowing for a clearer view of the relative performance of Bitcoin and the S&P 500 over time. Since 2019, Bitcoin's performance has shown significant volatility compared to the S&P 500, with clear phases that define its correlation with traditional markets. In early 2020, the COVID-19 pandemic triggered a massive market crash that impacted both Bitcoin and the S&P 500. Bitcoin's volatility was evident as it dropped significantly, but it quickly rebounded, showcasing its potential as a high-risk, high-reward asset. The S&P 500, while affected by the pandemic, had a more stable recovery. Following the pandemic, in 2021, Bitcoin entered a strong bull run, reaching new all-time highs. During this period, the S&P 500 also performed well with steady growth, while Bitcoin experienced sharp rises but remained highly volatile. Nevertheless, Bitcoin outperformed the S&P 500 by a considerable margin. This was the year when institutional adoption began to gain momentum, and Bitcoin started to attract more attention as a hedge against inflation and a store of value. However, in 2022, the market took a downturn. The S&P 500 experienced a challenging year, with inflation concerns and the Federal Reserve raising interest rates to curb inflation. Bitcoin, too, struggled in this phase, losing value as risk assets came under pressure. Its correlation with the S&P 500 was still noticeable, with both assets showing a downward trend in tandem during this period. In 2023, the S&P 500 showed signs of recovery, with strong performance due to easing inflation fears and better-than-expected earnings reports from major companies. Bitcoin, however, navigated a more turbulent landscape in 2023, grappling with regulatory uncertainty, macroeconomic challenges, and intermittent market corrections. Despite these headwinds, Bitcoin demonstrated resilience, as it consistently recovered from dips and maintained its price above previous lows. This indicated that Bitcoin had not only weathered the storm, but also established a new baseline, with periodic surges signaling growing investor confidence in the asset's long-term viability. In the last quarter of 2023, both Bitcoin and the S&P 500 experienced a notable surge, driven by optimism in the markets. Bitcoin benefited from renewed institutional interest and the continued anticipation of favorable regulatory developments, while the S&P 500 saw strong performance, fueled by tech-driven growth and easing macroeconomic concerns. Looking at 2024, Bitcoin has surged 135% year-to-date, particularly following the U.S. election results, which triggered a nearly 50% increase in its price. This upward momentum has likely been driven by a combination of factors, including increased institutional interest, the launch of Bitcoin Spot ETFs, and broader market optimism. The S&P 500 also posted solid 25% growth, continuing its strong momentum after the election. In 2024, we also witnessed notable corrections in both the S&P 500 and Bitcoin. In April 2024, the S&P 500 experienced a brief pullback, driven by concerns over corporate earnings and ongoing geopolitical tensions. During this time, Bitcoin showed resilience, outperforming the S&P 500 in terms of price recovery. This was particularly interesting, as Bitcoin had become more correlated with traditional markets over the past year. In contrast, during the July and August 2024 correction in the S&P 500, Bitcoin's price showed some volatility but recovered more swiftly than the broader market. These periods demonstrated that Bitcoin's performance can diverge from the traditional market, especially when investor sentiment shifts in response to macroeconomic factors. With Bitcoin now approaching the $100,000 mark, its performance in relation to traditional assets like the S&P 500 should be closely monitored in the coming months to determine whether this trend persists or if Bitcoin reverts to its more volatile nature. Please note, this analysis is for educational and entertainment purposes only and is not investment advice. Always do your own research before making any investment decisions. If you found this analysis helpful, be sure to like, subscribe, and hit the bell icon for more informative content.